Once again, Greece has the world on edge as voters go to the polls Sunday in an election that could determine the fate of the euro. Good morning, welcome to the News Hub. I'm David Riley of the Wall Street Journal. As you see, Greece has been pretty active the past few days, getting ready for this election. Also this morning, we'll be talking about how global jitters have investors seeing the U.S. in a new light and the growing crackdown on internet meds. But first up, let's go to Europe, and where we have Brian Blackstone in Frankfurt. Brian, good morning.
Good morning, Dave.
So, Greece, big weekend, as you talked about in your column this morning. First, they find on Saturday they have a sort of a win-or-go-home match in the European Championship Soccer, and then Sunday it's the election that depending on how this goes, could determine whether they stay in the euro or not. What do you think the election is going to determine? How's it going to turn out?
Well, it's the latest public opinion polls suggest that it's really too close to call. Basically, you've got the Conservative Party, which wants to keep the structure of the bailout with some modifications, running a real neck-and-neck race with kind of the far-left party, which wants to tear it up and insists on renegotiating it. And the reason this is important is if the Germans and other European countries have made it clear that they're not going to make significant concessions for Greece. Everyone's kind of getting a little tired of it. So,
right. Brian, what's the chance? What's the chance that the outcome isn't the party of the right or the party of the left? That's just inconclusive. And what would that mean?
You know, that's a pretty good chance, too. Basically, you have an even chance of all three of these scenarios. The first time they voted last month, it was inconclusive. If you get a very close race, even if the conservatives or the pro-bailout parties were to win, it's not clear that they would be able to put together a governing majority, in which case we would have the same situation we've had in the last month. We'd have it again, and it's almost an inconclusive result would be just as bad for the markets as if the anti-bailout party won, because there's really, I think there's just no more patience for this kind of standstill when it comes to Greece.
Of course, the big worry, as you're saying before, even worse than that, is I guess if Syriza, the radical left party, wins, says we're tearing up the bailout agreement with Europe. If that happens, and if this causes, as some fear, another Lehman-like moment in markets, that's really going to put the onus on the European Central Bank to become the bulwark against markets just freezing. What are their options?
Well, they've basically got three options. They've got some margin to cut interest rates, even though at 1% already, they don't have too much more room to lower interest rates. They can make more abundant bank loans available, which they've done at the end of last year and early 2012. And as their kind of nuclear option would be to go in and buy tons of Spanish and Italian government bonds to keep yields down and kind of keep the contagion from spreading. That's the most controversial option because there's a lot of disagreement over that policy, especially in Germany. The likeliest things the ECB could do to prevent contagion would be a mixture of interest rate cuts with more bank lending to kind of send a signal that they're going to do what it takes to keep a Lehman-type moment from happening.
Right. Now, Brian, of course, it's a small world, so it's not just going to be the ECB in this. Anything that happens there will have a blowback to the U.S. economy, right?
Exactly. I mean, there's kind of two ways that this blows back to the U.S. One is just the fact that Europe is a huge economy. The Eurozone is the second biggest in the world. And so there's obviously a big impact when it comes to exports, when it comes to multinational corporations. But the bigger risk is through the financial channel. If you just get a general freezing up of credit where investors don't really make a distinction between Eurozone banks and American banks or Asian banks. And if that type of event happens, then you bring in, what kind of response do U.S. officials take? What kind of a response do Asian officials take? Then it really becomes a global problem as opposed to everyone just looking at what the ECB is going to do.
And Brian, I think it was interesting you mentioned before about the Spanish and the Italian government bond yields, because even if the election turns out, I guess what a lot of people say, oh, that's a good result, the ECB isn't out of the woods by any means. Europe isn't out of the woods, right?
No, I mean, the election results don't solve any of the underlying problems. All they've done is generate a new uncertainty into the mix. The biggest problem for the Eurozone is a huge divergence between economic growth prospects. Spain and Italy are in recession, and they're probably going to stay there for a while. Spain, you have a 25% unemployment rate. You've got huge problems with the banks. They've had to basically made it clear that they're going to ask for a rescue for their banks. And none of these problems are going to go away if there's a positive outcome from the Greek elections. So the ECB, it gives them a little bit more space if Greece is kind of taken off the table as a big contagion risk, but their work is far from over.